Hi, welcome to this video day. It's the 21st of August. It is Sunday. Now, in today's video, we're going to look at trend following big trends. And in relation to this, we're going to be looking at five pairs. They're going to be Euro USD, Euro JPY, and three Euro correlated currencies against the USD, which are going to be the SEK, Swedish krona, NOK, Norwegian krona, and CZK, Czech krona. Now, in terms of videos this year, we've been heavily bearish of the euro. It's had a great fall on the USD. There's far more downside to come, in our view. Euro's fallen a bit on the JPY, but we're looking for an acceleration of the down move. And in terms of the euro correlated currencies, they're all going far lower. The euro's weakness is going to spill over into them. Now, in terms of Eurozone, terrible problems. The fundamentals are bearish, and they're going to get even worse. Now, from a technical perspective, all of these trade setups look really good risk to reward in our view. So what we're going to do is going to go and take a look at them right now. But just before we do so, obviously always keep in mind this is my view as of right now. It can of course change in line with market action and conditions. If you want to learn all our trading techniques, learn our strategy as well as check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and you get live access to our member center. Now, in terms of also beneath this video, you can join our Facebook group of traders if you wish and follow our Facebook page. Right, let's go take a look at the trade setups. It'll be Euro USD first. It's the monthly chart first, just to see the big picture. I'll go to the daily chart for levels of entry, stop and target in a moment. Now, in terms of the euro, I think the downtrend starts on this red candle here. 17 months of price action. Only 3 green candles are up months in the period. Yeah, it's a big, strong downtrend. And we're now at the psychological par level, just above it, the 1,000 level. If we can break to new lows here, or below last month's low, long way to go on the downside. Rallies will be selling opportunities as well. I'll come to resistance in a moment. But where could we go? Need to bring the chart out. I think we're going back here to this cluster of candles on the left. So I'm looking, for the 90 level. The euro's not oversold, okay? I'll come to that in a moment. We could longer term shoot even lower into the 80s, but 1,000 pips potentially to come. Now, in terms of our bearish view of the euro, it's played out so far. You need to look at the big fundamental picture of what's going on in Eurozone and what the ECB are doing. And then you can see why there is still a lot more downside potential. So I just want to look at some general charts in relation to this. Then we're going to look at levels of entry, stop, and target. Just some charts very quickly on the background to what's going on in Eurozone. I've shown some of these charts in my previous video a couple of weeks ago. They're still valid. I'm going to show them again for new viewers. Now, in terms of this chart here, it's inflation. It's soaring. Then you've got the dots, which are market expectations for inflation. And you can see the market expects inflation to start dropping before the end of the year. We don't see that happening at all. The squeeze in energy prices is still very much on and could get worse. A lot of people are saying, well, the ECB will raise interest rates to bring down inflation. They're forecast to raise by just over 1%. How is that going to help? It won't. It's too small an increase. Also, it's a supply side shock. It's not demand driven. Okay, so by raising interest rates, Eurozone demand is falling. The economy is going into a tailspin. It's just going to make it worse. I doubt whether the ECB can raise interest rates by over 1% because the weaker nations of the zone can't take higher rates. I really like this quote here, which I'm just going to read out to you. It comes from MUFG. Said the reality is the fundamental backdrop for the euro remains negative and short-term spreads, that's interest rates, dragging the euro USD lower has further to run. We view there is a much greater risk of the ECB delivering less than the current OIS market pricing implies, 115 basis points. We doubt that as well, compared to the risk of the Fed undelivering the 125 basis points priced by year end. The market just doesn't think the Fed are going to be hawkish. They pared back their view of how the Fed would raise interest rates, but the Fed have indicated they're probably going to raise more than this, and I think they have to. Okay, Now, in terms of, wrong page. Just in terms of how bad it is in Eurozone, just a few more charts. ECB doesn't see a recession coming. This chart's from a couple of weeks ago. It's already here. Manufacturing output, new export orders plunging. So the manufacturing recession is already here. Now, if we look at consumer confidence, blue line, it's plunged, okay? Services PMI, manufacturing PMIs, they're leading economic indicators. They need to catch up with consumer confidence, which they will, in our view. Germany, the powerhouse of the zone, is not looking good at all. IFO expectations, the light blue line collapsing. This dark blue line, GDP, will catch up with it, okay? Now, in terms, another chart, consumer mood in Germany, again, collapse. So retail sales will collapse as well. Any more charts? Yeah, this one here, a couple of weeks ago, showed it. Euro's about the same price as it was then. It shows valuation. When we're above this grey line, Euro's overvalued. When it's below, obviously we're not overvalued now, but we're not oversold either. We've got a long way to go before the Euro is oversold. This model is showing the Euro should go lower, just simply because of energy prices and how they've hurt the zone. This is natural gas prices, which are slightly higher. At this moment in time, electricity prices are higher than when I printed this chart. So the energy squeeze continues. You can see it in pipelines. Nord Stream is the big pipeline into Europe. It's collapsed, doesn't it? It's down here. All the transit pipelines pumping less gas by a lot less than a year ago. So it's about 20% of a year ago. So the zone is going to get no let up from the energy crunch, and the economy is turning down. What else have we got? This is going to be the last chart before I go and look at some levels. Again, it's a valuation model of the Euro USD. It comes from Macrobond Nordea. They're looking for a move down to 90, which is our target as well. So it's all looking pretty gloomy. And on the other side, the USD market is underestimating how far and how long the Fed will raise rates for, and overpricing, how much, in my view, Eurozone will raise rates by. So all favours the USD in our view. So let's go now and look at some levels in relation to Euro USD. This is the chart from our member centre. For anyone new to our videos, we do not use complicated technicals. So I've already got a bias from the fundamentals and sentiments. We just focus on big levels, which we think matter to big institutions. Now, in the video I did the last video I did in the Euro, we did have a little bit of a rally up. We missed our stop, and now we've come down. We're up about 150 pips. But obviously, we think there's far more downside to come. The significant level is this par level, which I haven't drawn in. Let me just go back to this chart. Par level here, if that gives way, okay, then I would sell if you wanted to sell a break lower, and then put your stop back behind these candles here. So you've got a round number 101. I'm lined up at 101.11. You want to give it 101.30 in my view. So not too much risk. If we're to rally back to the level I had on my chart, first level resistance there, let's say 101.50, you could look to sell off that level and use the same stop as we're using at the moment, which is 102.40. So we expect, rallies to fade. And if that big par level gives way, then I think you could see an acceleration to the downside. So, in terms of getting into this one, all pretty simple. If you obviously have the view that Eurozone fundamentals are bearish, there is a lot of downside in this pair. Okay, right, let's shift on to the next pair, which will be Euro JPY. Now, in terms of the yen, it's the most oversold major, and it tends to do well in periods of risk off. Okay, I'll go through the yen in another video probably tomorrow, but the yen has already pushed the euro down from 144 and come down, rally, down. Now you're coming up to test the 138 level. You've got 3 candles attempting to break the round number here. one there, one there. If we can't break out above 138 next week, I think this is a sell. And if you wanted to sell, you can come through these bodies here. So in terms of the bodies, let's get the daily chart. Okay, so the bodies here, you're basically just at a round number, so 137, okay? I'd give it a little bit of room away from the round number. So you could say 136.55. If we go through that level, go to 130 and then down to 128, okay? However, if you look at the monthly chart, and the yen is just so deeply oversold. We've got 130 there, then 128. But if 128 were to give way, we get real risk off. You could go down to 120 longer term. So in terms of the yen, you know, the risk isn't that much against the potential reward, just down to 128. I think it looks a good risk to reward trade. We'll see what happens. But I think it's going to break 138 early next week. If it can't, we fall through those bodies here, away from the round number, down. Okay, right, let's have a look at the USD against 3 euro correlated currencies, and yeah, they look really good risk reward trades as well. So let's start with USD NOK. On USD NOK. Now, in terms of euro correlated currencies, if the euro goes down, that can spill over and the proxies can go down even more than the euro. They're also very sensitive to risk on, risk off, and I think we're moving into a risk off period, which will weigh on them. In terms of the NOK, it's also a commodity currency in terms of big exporters of crude oil. I did a video earlier today saying I think crude oil will go down, which will help the USD go up. Now, did have a sizable correction there. Then we've got back long, and now nice candle on Friday. How would you play it? Go through the high. Okay, if you go through the high, stop could be behind first level support. If we dip back, you can come off the first level of support, stop behind second. Daily highs, then monthly resistance. Okay, but just drawn it in on the daily chart. It's not too far from daily highs. So this has got really good risk to reward on it. It's about 6-7 to 1, isn't it? Obviously, our view's got to come to fruition, but I'm liking the look of that blue candle on Friday. This one I covered in my last Euro video. And we were long and we got stopped out, but got a really good entry just off the 10 level, 10.06, you can see it. And that's a 6% rise, you know. So how much higher could we go? I put target open, but there is a level to aim at, which is here, the 11 level. Okay, it's a good few years back, but the SEK is looking very, very weak. And in terms of getting to the 11 level, that's again off the top of my computer screen, you can buy a breakout above 10.60, stop behind first level support. If we dip back, come off first level support, stop behind the second. And we're probably a little bit overbought in the short term, so I won't be surprised to see a correction. But this one's looking okay. USDC is okay. This currency, or the Czech Republic, yeah, sure, it's exposed to Eurozone. About 90% of exports go there. But it's also exposed to the Ukraine-Russia conflict. You used to do a lot of business with both nations, and of course that's dried up. And the USD has mounted a nice rally. So if we can break out to new daily highs, we're going up to 26. Stop could be behind first level support. If we dip back, come off first level, stop behind second. I'll just show you the monthly chart. USDCZK. And here's the monthly chart. You can see the 26 level. Yeah, some tails up here and the big tail up here. We could get back to that level. Again, another really good risk to reward trade in our view. So yeah, it looks like the USD should go higher on the Euro and the Euro proxies. We're seeing what might happen with the JPY. If the JPY can get moving, that could be a huge trend. It's kind of been a bit stop-start, but we'll see. But we like the look of all these trade setups. I hope you found the video useful. Thanks for watching it as per usual. Take care. Have a good day.